Good evening, guys. It's about 3 o'clock. Today is October 23rd, Monday. Hope everybody's doing well. We had a mixed market today. NASDAQ still in range, still choppy, did okay though, up 35 points, about 0.2%. On the other hand, the S&P 500 and also the Dow Jones were slightly down. Again, compared to where we were at the beginning of the day, these are much better positions. So the S&P 500 mostly flat, I'd say down about 7 points. Not a great close, but not a bad position to be in right now either. And the Dow Jones Industrial Average down about 190 points, much more, about 0.5%. One of the stocks that showed up on my radar was Palantir. PLTR is the ticker symbol. I thought we'll do a quick analysis, see where we go from where we are right now. Let's start first with the financials. As we always do, we start with fundamentals and trying to get a sense for where the stock has been and where it is going. So about 600 million in revenue 2018, about 5 years ago. The company went IPO, I think, in 2019, 2020, and then now has gone from nearly 700 million to about a 1.9, almost $2 billion run rate. I'd say trailing 12 months is about $2 billion. So it's gone up almost 3x in the last 4 to 5 years. Again, accelerating in revenue 40, 50%, 47% in 2020, 41% slowing down, slowing down even further to 23%. That's not a good sign, but they've lost a lot of money, but losing less money, as you can see as well. So even though the growth has slowed, so has the losses. On a quarterly basis, however, now they finally seem to have turned around and they're showing a quarterly net income. So that's I guess, a good sign to some extent. The company is very richly valued. For a company doing about 500 million in the quarter, growing about 10 to 12%, which is, high single digits growth, not a great growth overall, but profitable. So they control their destiny. And they actually are $34 billion for a $2 billion company. That is extremely rich. If you just look at they will have price to earnings ratio, hopefully very soon, one more quarter of positive earnings, and they'll be good. But 17 times, 18 times almost price to sales, that's very rich for a company growing 12%. So I'm not sure I really like where it is right now from a valuation perspective. But the good thing is 80% gross margins and net margin of about 5%. If they turn things around in terms of being able to show more profit very quickly, it might be interesting to get to. There are a bunch of charts that I drew. Let me just clear that up. So let's go to the technical analysis. Overall, on the fundamentals, I'd give it a B. I wouldn't give it an A plus. I wouldn't give it an A either. It's a B, B plus. Their growth is tremendously slow, but the valuation is very rich. And I'm not sure why, because they're not growing very fast. If they've got all this great technology, they ought to be growing much faster than they're growing right now. But the valuation seems to be because some people seem to like it. So went through a steep up climb after IPO. They actually went direct listing. They didn't go IPO the traditional method. Did a solid consolidation and then a very good drawdown, stage 4 drawdown. A consolidation all the way from May of 22 to April of 23. So almost a year of consolidation, and then gone from somewhere in the $5 range to the $16, all the way up to the $20 range. So we went up 4x and now come back down to about 3x, I would say, from its lows. So from about $5, $6 to about $16, $17. Overall, right now, it seems like we're still in at the monthly level, I'm going to put the stock as most likely consolidating. I'm not going to say that they're necessarily in a stage 1 incline, stage 2 incline yet, but this definitely seems like a consolidation, unknown stage yet kind of a situation. On the weekly chart, going to the weekly chart, yeah, you can see that they consolidated very nicely, formed a nice pattern. So I'm going to get a very nice, something that looks like all the way till here. This was June 2023. And you see a nice bottom that has been forming on the company. That's a good sign. It's formed a nice bottom. It's done a good job of consolidating itself. Now it's gone to a new consolidation zone from, I'm going to pull it a little bit lower, somewhere in seems to be wanting to test the 13s very frequently and go up all the way to the 1920s very frequently. So this is a good cup, and this is a little bit of a handle, you could call it, but since then it's been consolidating. So I can see a interesting head and shoulders on the weekly, but not really exciting for the stock to have to go up dramatically. So that's the first stage. Now let's go to the daily chart. On the daily chart, I can see definitely head and shoulders. This is left shoulder, this is the head, this is the right shoulder. So again, not a great sign. It actually did a little bit of a movement. Let's show you that one. That's the shoulder right. That's the head. And this is the shoulder right. And so it should go down all the way and maybe touch somewhere in the 13-14 zone. Earnings are coming up in about a week, I'd say. So before earnings, where would you expect the stock to go? I would most likely expect it to, and you look at the moving averages, they're all trending downwards to flat. Still little bit below the 50-day moving average, maybe trying to get to the 100-day moving average, which is about $15 range. And if you look at the RSI, moving downward, but slightly getting a little bit better, but still on the daily close, 12 SMA is actually, 2-day SMA is actually flat. So this is not a good sign overall for the stock. I'm not expecting it to do dramatically better. It should be range bound. Palantir should be range bound, and to try and go down maybe to the 13-14 zone. There's a bunch of resistance and support for it here. One of the support that you could definitely, so this is definitely an area of resistance, which is the $18 mark. And an area of support, one of them definitely is this $13 range. But even before that, there's some support for it, multiple touches at the 1442 range. So I would expect it to maybe touch the 1442 depending on the market goes, and then expect to try and rally back if we had very good earnings in about a week. So I would expect somewhere between now and the earnings time frame, it should come down to about $14 a share in the next week or so, and then try to rally up and do a gap up if it does very well, expecting some resistance in the 19 zone, expecting some resistance again in the 20 zone. Thank you very much for watching. Appreciate you guys. Please like and comment and subscribe.